Forex charts are essential tools traders use to visualize price movements and make informed decisions. So, traders use charts to make informed decisions in their trading of Forex and even other currencies and other variables. Among the variety of chart types available, three are the most popular and widely used. The three are line graphs, bar charts, and candlestick charts. Each chart type displays price data differently and offers unique insights suited to different trading styles and purposes. Now, line chart is the first one I want to look at. A line chart is the simplest form of price charting. It plots a continuous line that connects the closing prices of a currency pair over time. How does line chart work? The chart draws a point at each closing price for every selected time interval, e.g., 1 minute, 1 hour, 1 day, and connects these points with a line. What does a line chart show? A line chart provides a clear view of the overall price trend, making it easy to identify the direction, whether uptrend, downtrend, or sideways. What is the strength of a line chart? It is easy to read. It is ideal for beginners and good for long-term trend analysis. What are the limitations of a line chart? It shows only closing prices, so it hides price volatility within the period, such as highs and lows. Now, line charts are best for traders and analysts who want a clean, straightforward view to identify broad trends over time. Now, let's look at bar chart. The bar chart, also called high-low, open-close, or HLDC chart, displays more detailed price information within each time interval. How does the bar chart work? Every bar represents one time period and consists of a vertical line showing the high and low prices during the interval. A small horizontal line on the left representing the opening price. A small horizontal line on the right representing the closing price. What does the bar chart show? The full price range, opening and closing levels, giving a comprehensive view of price action. What are its strengths? It displays more data than line charts. It is helpful for intraday and swing trading and shows high volatility within each period. What are its limitations? It is less visually intuitive than candlestick charts. It can appear cluttered in volatile markets. Bar charts are a balanced choice for traders seeking detailed information about the complexity of candlestick shapes and patterns. Candlestick chart. The candlestick chart is the most popular chart type among Forex traders because of its clear and visually intuitive presentation of price action. How does it work? Each candlestick represents one time period and contains a body showing the range between the opening and closing prices, wicks or shadows. These wicks or shadows extends above and below the body, indicating the high and low prices. Then we also have color coding under the candlestick. Typically, a green or white candlestick means the closing price is higher than the opening price, that is, it is bullish. And a red or black candlestick means the closing price is lower, that is, bearish. what it shows. It gives detailed insight into charts, into market sentiment, showing buying and selling pressure during each period. Its strength is that it is excellent for identifying patterns, reversals, continuations, and the market momentum. The limitation of this is that it can seem complex for beginners and visually busy during volatile periods. Candlestick charts helps traders recognize short-term price patterns and make timely trading decisions. The commonly used chart pattern is the candlestick. Choosing the right Forex chart depends on your trading style, your goals, and the level of detail you want. Beginners often start with the charts for simplicity, with the line chart for simplicity, while more experienced traders rely on bar and candlestick charts to glean market sentiment and make precise trading decisions. Knowing how to read each chart type is crucial for effective technical analysis and successful Forex trading. So the next thing we're going to be talking about is mastering Japanese candlestick patterns for beginners. That's the next thing I'm going to talk to you in this series on how to trade Forex, as I'm bringing it on this YouTube channel called Dr. Olumide YouTube channel. Please subscribe to this channel, like this video, share link of this video with family and friends, and keep coming back to this channel for more. If you have gained value from this video, I want you to go to this video right now that is showing here. This is the next video you need to watch, and then in the next one, I'm going to bring you mastering Japanese candlestick patterns for beginners. I'll see you in that video.